let's say you can take a house that has an ARV of 350. Let's assume we can sell it for 369.9. Just throwing a number out there. So obviously you can sell it for more than what the appraised value is because you're selling financing.
Right.
You're also the mortgage company. You're not charging any mortgage fees, things of that nature. So it becomes a cash flow game. So if you sell a home for 369.9, let's just say you get 35,000 down. Pull out my little handy dandy calculator here real quick, and you wind up with a $334,000 mortgage on the property between you and your back-end home buyer. I'm just going to run an 8% interest rate, not a 9 or a 10 that you might be able to put on this home, and that generates $2,460 a month of principal and interest income. And so from a decision perspective, as you look at this, you go, if I'm collecting $2,460 a month, how much am I paying out each month?
Right.
So am I paying, and obviously, you made the comment that the first lien was really low, something below 4% on that 250 first. Let's just say it's 3.5% interest rate, and it's got maybe on a standard 30-year mortgage. That's $1,100 a month, principal and interest. And if the second lien of $85,000 had a 6% interest rate on it, when you do the math, you're making $825 a month positive cash flow. Now, if you got a $30,000 down payment or a $35,000 down payment from your buyer, even if you paid out some commissions, you're going to net $20,000 to $23,000 in your pocket. So that gives you a lot of potential cash to carry that loan for 60, 90, 120 days while you're marketing it for sales, some money to do some minor repairs and cleanup with as you sell it, so that at the end of the day, you may actually put money in your pocket. You might break even, but what you're generating is an $825 a month positive cash flow. And you're generating the difference between $335,000 loan to your seller's $335,000. So you don't really have any equity, but you have a cash flow goal. And again, I would do a deal like that all day long. That's paying me $825 a month for the next, let's say, 28 years.
There's a reason why we're talking today, right?
Well, it's just learning different ways to look at deals. And there are some investors who like that because it's a cash flow. There are some investors who go, there's no equity, I don't want to do it. I got it. Different investors and different people do things differently. That's okay.
Now, that same example, if the second lien of $85,000 demand payment to be paid off now, will that still work then?
You have to find a way to pay it off.
Yeah.
Maybe either your own cash or using private capital. But the numbers are still going to work the same, except that now that $800 capital or cash flow you're making, maybe you've got to use that to pay off your second lien holder faster. But, with that big down payment you're going to get from your buyer, if you could apply that down payment to your private lender to repay part of that $85,000, so that now maybe you owe him $55,000 or $65,000. Paying him all that extra money, you can pay them off probably very quickly. And so that becomes more of an equity building game than it does a cash flow game. And it may still work very well. It's just that based upon the situation you're describing, the investor's got to decide, is he willing just to sit and generate equity and no cash flow or not? And again, every investor is different in that decision process.
Now, at what price point can you not apply this method to?
I think you can apply it at all price points, to be honest with you. I've closed deals in the $1.2 million price range before. And you'd go, do people really do that? Yeah, they really do that. People in all price points need help. And people in all price points are looking to buy property. And there's a lot of buyers out there who can easily afford, let's say, $1.2 million home, but they just can't get a new mortgage for some reason. So maybe they have changed jobs recently, and they intend to refinance it in a few months or a few years, or maybe they just they change their jobs or whatever it might be. They just can't get that loan today. But it doesn't mean you can't do it. And people, I think that it's a whole wide variety that's out there, and that this is all available for.
Yeah,
So,
I think your creative financing solution fit right in with what we got going on today. We have actually, I noticed in my area is you got a huge amount of people wanting to sell their house, but they only bought it a year or two ago, when the price is really high, and
yeah,
now they have to relocate or for whatever reason, they need to sell that house. And often we find that we can't buy it.
yeah. Well, we just did 2 deals just like that in Dallas in the last 30 days. Both deals were less than 2 years old on the mortgage. I don't know what was happening with the sellers internally. Was it a transfer, or was it they had lost their job, or was it a divorce? I don't know the facts that well. But both were the same scenarios. But both deals, the houses were in excellent condition. We were very lucky there. And we were able to find buyers for both that make them both work. There's not a lot of equity in those properties, but there's awesome cash flow. If I can make $800 or $900 a month cash flow on a property and do that once a month for a year, oh my gosh, that's $10,000, $11,000 a month of cash flow you generate after 12 months.
Hey, I'll take that all day long.
Well, we all would take that all day long, wouldn't we?
Yeah.
But obviously, you got to find the deals. You got to know how to work them and negotiate them. And every one of those deals is different too. Sometimes you may have some equity. Sometimes the seller wants equity. Sometimes you may need some cash to maybe you got to pay realtor fees, or maybe you have to pay a wholesale fee, or maybe you have to pay the seller some walkaway money or something. But when you realize that a down payment that you'll get in the near future, it help you reimburse those monies, or with that large cash flow you're getting, you're able to pay back that private source of funds quickly. It becomes a great opportunity, and it's just learning how to look at deals through a different lens is all it is.
Okay, so with you being involved in so many different facets of the real estate world, what kind of challenge or challenges do you see that investors are faced with today that they may not have been faced with, early on?
Oh gosh, you go back, 12 months ago, 18 months ago, right? And everything was rocking and rolling. Nothing's ever going to stop. And all of a sudden, everything changes, right? Especially in the financial world. And bank rates went up from 5% to 9%. And that makes a huge difference in how you can buy a home for cash. It used to be that if you could buy a house, let's say it had an ARV of $100,000, you could buy that house for $80,000, and financially you could make it work. But apples to apples today, you got to buy that same house between $68,000 and $70,000 just to break even.
Yeah.
Those kind of things are out there. So you see that change in the economy. That means for people who are buying homes for cash or trying to wholesale them, prices have to come down. Now, we're still in this unique little bubble in Texas, probably in Florida too, the other states. We still have an influx of people coming to the States. They're flocking out of California or Jersey or New York or someplace, and they're coming here. And so we still get this artificially high demand that normally is not out there. But one of the things I keep trying to teach to the investor world out there is houses aren't, although you may find some transactions that will sell in 2 or 3 or 4 days, but I think you have to start pushing your time frames out and anticipating a 90-day hold, maybe even a 180-day hold, which is more normal in the real estate community for selling a home. And so, you have to focus on those dynamics differently. And if you're in the wholesale world, let's say, it's going to be a little more difficult to sell your homes, and your profits are going to start shrinking. The times that we had in the past, couple, 2 or 3 years have pretty much gone away. You can still make money and you can still do well, but it is slowing down naturally. And eventually when the supply and demand, catch up with each other, things are going to get back to normal sales and time frames on properties, I think. And it's just what we've seen historically in the past. But there are so many young investors who have gotten into business recently. They have not experienced those times. Mm-hmm. All they've seen is, this constant upward spiral of everything working just amazing. And all of a sudden, the brakes get put on and they're trying to figure out, what do I do? And you've got to learn how to adapt.
This episode is brought to you by National Real Estate Insurance Group, a national independent insurance agency specifically for real estate investors. I personally use NREIG for my investment properties. They offer a low monthly payment option to help you to lower your cash out of pocket when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443.